inventory system. So it's a continuation to chapter financial asset. I don't want to look at financial asset. I may do a recording on that financial asset, ya. Mana pergi ni? Okay, inventory and cost of goods sold, chapter 8. All right. So remember that just now what you did was you have done your punya how to decide on the cost of goods sold. Remember? And then you have your closing stock. So all that is related lah. Yeah. So we are going to look at actually when you do, for example, perpetual, it still goes back to whether you do perpetual or periodic. Yeah, perpetual or periodic. And then the recording of COGS and closing stock ni is actually looking at how you actually, in actual, is how you actually record your COGS and closing stock lah. Yeah. So we mentioned that perpetual, you're going to record that on every transaction, you're going to record inventory. Remember? All right. And then whenever there's a sales, then you have to record your cost of goods sold, isn't it? So that is for your inventory. So at any point of time, you have your purchases, means that when you purchase, you have inventory goes in. All right, then you record how much balance of inventory that you have at any point of time. And when there is a sales, then you're going to record how much is your sales and then how much is your closing balance of your inventory. So your closing balance of inventory at any point of time is determined because you use perpetual system. Right, so it means that every transaction you will have the recording and you always update whatever is your closing balance of your inventories. So closing balance here, it may refer to closing balance at the end of the day. It could be closing balance at the end of the month, or it could be at the end of the year, or any point of time required by the management. So you do have that information in hand. So that is why they use perpetual. And how they can use that? Because they use accounting or software. Yeah, for example, whenever now you see, for example, if you go to any of the store, superstore, for example, they just use a barcode, right, to record the inventories, right? Sometimes they just do a random checking on the inventories, then they see, okay, this item, how much is left in hand. So maybe they should reorder or what. Right, so this is why we need to have a very good inventory system, so that if the goods are no longer in the company, then you can make a new orders from your supplier, because it takes time for the goods ordered and goods to arrive at your company. So you do not want any point of time where customer comes in and you are not able to sell because you don't have any goods in stock. Yeah, so that's why you need to manage your inventories closely. But at the same time, you do not want to have too much inventory, right? Because too much inventory, then it will tend towards damages, all right? Theft, for example. So you need just what I call it, just in time, just enough number of stock in order for you to maintain. And remember that for you to, from the stock, right, in order for you to get cash from the stock, from the inventories, you have to sell to your customer. If the customer pay you cash, then you get cash immediately. But sometimes most of the time, when you talk about business, when you sell goods to your customer, you create accounts receivable. So even though you sell today, you may get your cash in 10 days or 30 days, depending on the credit terms. Yeah. So it takes time for you to convert your inventory into your cash. Yeah. So that's why the management of inventories is very important. Right. So in your flow of inventory cost, all right, you see that your inventory is always your part of your balance sheet item. It's an asset. Yeah. So and the inventory is always recorded. Remember, whenever you have perpetual, for example, you debit your inventory. Debit inventory whenever you have purchases. So inventory means that whenever you look into the balance sheet, there is an inventory that you know is a perpetual accounts, right? Perpetual system. So when you record inventory, then you know that how much inventory at any point of time, right? At the same time, under perpetual, you're also going to record cost of goods sold whenever there's a sales, all right? So whenever you have sales is at the selling price, but you also have to take note of how much is your cost of goods sold. So you want to identify how much is your sales, how much is your cost of goods sold. Yeah, so that's why this topic will help you to compute how much is your cost of goods sold based on the inventory movement. Okay, this is what we have got in the chapter 6 earlier. So that's why I do this immediately so that you are still refreshed, that you still have that fresh information. All right, so under perpetual, whenever you purchase, you debit your inventory, credit your accounts payable. All right, and then when there's a sale, right, you're going to debit your cost of goods sold and credit your inventory. So this is the cost. So this to show you the movement of inventory. Inventory comes in, inventory goes out. So you're going to have the movement of inventory in your accounts. All right, and you also want to know, for example, if you're talking about, it depends, yeah, the business, it could have, you may have a shop that sell, you're talking about inventory machinery, merchandise, right? So sell antique cars, for example, right? So for antique cars, so every item is very high cost, right? And the selling price is also high, but the number of cars that you sell is very minimal. All right, because as compared to what you call unique cars, or what you call that, what do you call that, those expensive car, apa ah?
Exclusive car.
Exclusive cars, for example,
Exclusive.
right? So they have very limited, because even the sales is not that much. They don't expect a lot of sales phone. All right, because from one sales of a very expensive car, the margin is very high already. All right. So in that case, we have to identify which car, which item, which inventory that you actually sell, right? Because you have to record that. And for example, you're talking about a boutique, all right, that sell a very expensive clothing, right? They have to make sure that, okay, this, when they make sales, they have to identify, okay, which cloth that they actually sell. All right, so that has to be recorded, because they want to know what is the actual cost of that particular cloth, and what is the selling price of that particular cloth, because other clothes may have a different price, different pricing. Yeah, so in that case, it's very important for you to monitor the inventory. Okay. All right. In this case, for example, a specific identification. All right. On 1st March, Meet sells one of these Alco generators to Builder. All right. For 1,800, and use specific identification, the company will have two. So here, all right, the table shows you that you have 4 columns. All right. The first one column is on the date of transaction. Second column is on the purchases. So purchases here refers to whenever you purchase inventory from your supplier, what comes in, yeah. And normally beginning of the year, you also have the balance brought down. All right, the opening balance of your inventory will also be parked under the it could be purchase, or it could be inventory balance, yeah. So and then you have the cost of goods sold column, and this column will only record whenever there's a sales. All right, you're going to record your cost of goods sold whenever there's a sale. So, for example, in this case, you have January 5th, all right, you have purchased 2 units at 1,000 each, so total 2,000. So, you don't have
2,000.
any opening balance, right? So, it means that the balance as of January 5th is closing stock is 2 units, 1,000 each, 2,000. Yeah.
2,000.
And then on February 5th, you buy another 3 units, and each unit costs you 1,200. So, the price is different. Why? Because this
2,000.
one is a specific, means that we're talking about, remember, perpetual is for unit cost, which is different. It's not the same. It's very expensive. So that's why the cost is different. Yeah. And even, for example, if you purchase the same item, all right, for example, you're talking about gold, all right? Today's price of gold could be 200 ringgit. But if you were to buy tomorrow, it could be 220 ringgit per gram, for example. So the
Different.
price changes, yeah. So you have to record the cost, because the cost is the amount that you pay when you first purchase, right? So in this case, as of February 5th, you have 2 units that cost you 1,000 each, and you have another units, 3 units that cost you 1,200 each. So you have to be very specific about your inventory balance. Yeah. And then he said that on March 1st, you sell one of Elco generator that costs for 1,008. right? And then in this case, it says that the company uses specific identification. They say that, okay, you sell the one that costs you 1,200. So your cost of goods sold must be the one that costs 1,200. So you must take out from that particular inventory. So if you sell one unit that costs you 1,200, so at the end of the day, you will have the balance, 2 unit which is cost you 1,000, and the 3 units initially you have, now you only have left with 2 units at 1,200.
200.
So yeah. Because here you see that the 1,200 unit, initially you have 3, but now you sell that. How do you know you sell that unit which a 1,200 cost? Because it's specifically mentioned the one that you sell costs you 1,200. So you have to reflect that information and update your inventory balance. Do you get that? Okay. Alright. So ini kalau it says that we use specific identification, right? So means that kalau you cakap pasal the method that you use, you could be that it could be number one is that scientific pula. Specific, right? Specific identification. And number two, then only we say that, okay, next is this one. So, bila you kata you jual 1,000, you remember that the under perpetual, when you make sales, there are 2 entries. One is to record the sales and the other one is to record the cost. Cost is 1,200, COGS 1,200, credit your inventory, but the sales is recorded at 1,800. So debit your cash, credit your sales. Kenapa you debit your cash? Sebab the information provided you is that paid 1,800 cash. So you actually receive cash. That's why you debit your cash. Otherwise, you are going to debit your accounts receivable. Okay. So this one is specific identification. The next one, we have the average cost method. Yeah. So we call it as an average cost method. So when talking about average, it means that weighted lah. All right. The average cost, you're going to sell at the average cost of your inventory. So let's say the example here, you have January 5th balance is 2 at 1,000. And then February 5th, you have 3 at 1,000. Okay. So now, all right, your balance is actually, you have 2 types of balances. 2 units at 1,000. On February 5th, you actually have 2 units at 1,000 and 3 units at 1,200. So if I were to hold on, yeah. Come back. Okay. What do you see now? Okay. Alright, so bila average cost ni, dia akan buat macam ni tau. You akan ada 2 units at, how much is that?
1,000.
1,000 is it? And then the
Then
balance,
1,000.
another 3 unit at
3 unit for 2,000. 1,200.
1,200.
200.
Okay, so how much is this? This one is 2,000 and this one is 3 at 3,600. So total is 5,600. So macam mana nak kira average price per unit? You ada 5 unit ni kan? So you divide lah. 5,006 divide by 5, you akan dapat per unit average.
1120.
1120. So you akan dapat per unit is at 1120. So when the question asks you that they actually sell, how much is it? They sell, mana dia? Hilang. How many they sell? They sell 1 unit. So the 1 unit will be at 1120. Because why? The cost is using average cost. Okay. So bila you ada macam average cost, you akan jual 1 unit at 1120. So balance ada berapa unit? Initially you have 5 units. Now you sold 1 unit and then the balance 4 unit and the 4 unit will be at 1120. Alright. So if you assume that then you have a new purchases, then you will have to add on the cost of the purchases first. So you will compute the average cost only when you sell goods, right? If you do not sell anything, you just plug in the purchases to continue to put in the purchases and the inventory balance of all the purchases. But once you want to sell, then you have to decide how much is my average cost. So how you decide on the average cost, you have to look at the total RM here and number of units. So you divide the total cost over total number of unit, you should get the average cost per unit. Can you do that?
Yes.
Yeah. You only compute COGS only when you have goods sold. Yeah. All right. So that is on the average cost. The third method is what we call the first in, first out. Macam mana nak buat next page ni? Anis. Okay. So the next one is on first in, first out. So first in, first out, it shows that you're going to determine how much is your cost of goods sold based on first in, first out. So the issue here is actually to determine the COGS. All right, and then how much is your closing stock based on the method that you use. So in this example, apa yang punya sok-sek ni? Okay, when you talk about first in, first out, you look at this. Hilang. Apa pasal lah I punya ni? Okay, first in, first out means that when you want to sell your goods, all right, the cost must be the one first in the balance, right? First in, first out. So the one old stock must go out first. Do you get that? First in, first out. So old stock first in. And when you sell, you must sell the old stock first. Do you get that? So that's why namanya first in, first out method. So let's see the example here. You have January 5th, you have balance of 2 at 1,000, 1,000. So you have balance lah. And then February 5th, you buy another 3 units at 1,002. So this is your balance. All right. Which one is the earlier balance? Which one first in?
So that means we sold the first unit cost lah. So that means 1,000.
The first one dulu. So katalah kat sini, your balance on February 5th, you have 2 units you purchase first kan?
Yes.
2 unit you beli bila? January 5th.
January 5th.
Yang 3 units ni you bought on February.
February 5th, yes.
So bila you sell, bila you kena first in, first out, you kena jual the first that you first purchase.
Yang first dulu lah.
Yang first dulu. So
And
kalau you
January
are
5th, January 5th.
you will take 1 unit at 1,000. Okay?
Okay.
So bila you jual from 1 unit of the 1,000, so the balance of these 2 units ni akan tinggal 1 unit only lah.
Yes,
Because
1,000
you
only for the
sold 1
first.
unit. Yeah, so the 1,000 tu tinggal 1 unit and the balance 3 units tu still there. And you, the cost is 1,200. So total your closing stock will be 4,600.
600.
Okay tak?
Okay, insyaAllah.
So katalah you continue, katalah next is that you sell for another 2 units. Katalah I say April, you sell 2 more units. So how are you going to decide on FIFO? What will be your cost of goods sold?
Okay, the first one from the what we purchased on the January 5th, 1,000.
Okay.
And then plus for the 5th, February 5th, 1,200. That means 3,400.
So maknanya you tak payah nak ulang balik benda ni tau. You don't have to repeat this. But you just tengok you punya balance as of March 1st ni, you ada 1 unit at 1,000, 3 units at 1,002. So when you sell 2 units in April, you akan ambil 1 unit from 1,000, 1 unit from 1,002. So balance, you akan ada 2 units at 1,200. So you tak payah nak repeat balik yang beli January, February ni. You just tengok you punya balance. Then you see that okay, you akan pakai the first line dulu, then only you pakai the second line. Kalau tak cukup, you pakai third line. So that's how it goes lah.
Yes.
Nampak? And the balance tu whatever which has not been sold lah. So that is your closing stock.
Closing stock. Okay.
Okay. The cost of goods sold is 1,000, leaving 4 units, total of 4,600. Okay, that is first in, first out. The next one is the what we call last in, last in, first out. So kalau first in, first out, maknanya all stock must be sold first. Tapi kalau last in, first out, dia maknanya whatever stock, the recent stock will sell first. Do you get that?
Yeah. The new one.
Yes. So in the newest one will be sold first lah. So which is kalau nak kata that's why accounting standard does not actually accept last in, first out method. Ya, sebab dia macam bila last in tak, it doesn't make sense lah. Alright, bila you nak jual, you jual harga yang baru. Okay, later I show you why is this method last in, first out is not acceptable by the accounting standard. But method ni memang ada unless you can justify why your company must use last in, first out. Other than that, we have to use FIFO or your average cost or specific cost. Is that clear?
But normally the company use FIFO.
Apa dia?
Normally the company use FIFO lah.
Yes. Most of the time memang FIFO. Yeah, first in, first out. Okay, bila you cakap first in, first out, you talking about accounting now. What is recorded in your accounts? It does not necessarily reflect the actual movement of the stock. Faham tak? It's not the actual movement. Kalau dia nak jual, dia jual di mana-mana as long as within the same category lah. Right? So tapi this one we're talking about the accounting, how we record the accounting based on last in, first out or first in, first out. Kalau last in, first out, you tengok ya, as of 1st February 5th, you ada stock yang mula-mula 2 units at 1,000, then you have 3 units at 1,200. Is that clear? February 5th? So that's your balance. So which one is the new stock?
February 5th, 1,200.
1,200 is the new stock. So bila pakai last in, first out, you akan ambil daripada yang bawah sekali. The newest stock, you akan jual dulu. You will sell the newest stock first. So in this case, if you sell 1 unit, you akan ambil 1 unit from 1,200. Why? Because the 1,200 is the last in punya stock, which the most recent stock purchase. So you are going to take that stock to be your cost of goods sold. So your closing stock means that you still have the 2 units at 1,000, but the 1,200 units you only have left with 2 units. So your closing stock value is 4,400. Okay. Why is it so important for you to determine your cost of goods sold and your closing stock? Kenapa? Why you have to be very accurate? Why you have to be, because kenapa there's one topic untuk inventory only. Ada 2 chapters actually ya. Chapter 6 and chapter 8 is on inventory. Because it's very important to value your inventory, especially you are in the merchandising. Inventory appears as a balance sheet asset. So katalah your punya, okay, which one appears in your balance sheet? Value of the inventory. In this case, which one actually appear in your balance sheet item? Inventory. Which amount?
For this one, for 4,400.
Why? Because that is your closing stock. So means that at the end of the period, this is how much stock that I have. So this is my asset, my inventory. So you will always take that amount to be part of your inventory closing
One
stock.
year.
So appears in your balance sheet. So that's why kalau balance sheet, you must make sure that the amount appear must be the closing stock. Yeah, the closing figure. Okay, what about your COGS? Where would it appear? Anyone? COGS.
Is it in the income statement
Yes.
subtracting from the revenues?
Yeah, your COGS appears in your income statement. So you have your sales minus COGS. So in the perpetual, you can automatically know how much your COGS from this column, total of this column. COGS column 2. So every transaction you have a total. So you total up everything. So you have one figure for your COGS. So under perpetual, your COGS is determined in such a way. But under periodic, how you decide on the COGS? Periodic. Do you use this table for periodic?
Not sure.
Hmm.
Sorry, what's the question again? Like this table?
All right, this one is for perpetual.
Yeah.
Right, you decide on the cost of goods sold and the closing stock for your perpetual system.
Yes.
What about your periodic? How you decide on the COGS?
Periodic, you usually just sale and purchase, and you don't have inventory. So
How you decide on the value of your COGS?
based on sales?
No.
Not sure.
There's a formula for COGS for periodic.
Oh, opening balance minus inventory minus the minus something, and then plus closing balance. Plus
Opening
purchases.
balance of
Plus
your stock
purchases.
plus your purchases.
Yes, minus
Your closing stock.
Yes.
That would be your COGS. Okay, take down that. Take note of that. Your COGS equals to opening stock plus purchases minus closing stock. So you must remember this formula, yeah, for your periodic, because normally question will ask both periodic and perpetual. Okay. Okay, so this is what happened is that so if you look at, for example, last in first out, let's look at the cost. Let's look at your closing stock. Okay, let's look at COGS. All right, COGS under LIFO is the cost of goods sold is 1,200. Under FIFO, your COGS is 1,000. All right. How you decide on the gross profit? How you decide on the gross profit?
based on which method is being used by the company?
No, both. Either perpetual and periodic. How you compute your gross profit?
Oh, sales minus cost of goods sold.
Yeah. Your gross profit is sales minus COGS.
Yeah.
So under FIFO, your COGS is 1,000. Under LIFO, your COGS is 1,200.
Yes.
Assuming that the sales is 1,800. How do you know that? You say that on March sold one generator for 1,800. So 1,800 is your sales amount.
Yes.
And under FIFO, your COGS is 1,000. What will be your gross profit? Under FIFO,
800.
gross profit is 800. But under LIFO, what is your gross profit?
600.
600. Okay, take note, yeah. Gross profit under FIFO is 800. Because why? 1,008 minus 1,000, you get 800 gross profit. Under LIFO, 1,800 minus 1,200, gross profit is 600.
600.
Okay. If you are a shareholder, which one you like?
Prefer this one. The other one, FIFO.
FIFO, right? because it shows you a higher
Gross profit.
gross profit. But if the company submitting to income tax, which method they want to use? If they have to pay tax, they use which method?
LIFO.
I think
They use
LIFO.
LIFO. Because why? Because profit is lower, means that they have to pay lower tax. Would the RRB like it? Of course not. Would the government like it? No, because they want to collect as much tax as possible. Right? But there are some companies that actually, all right, for the annual report, they show FIFO, and for income tax purpose, they use LIFO, which is
LIFO.
wrong. Yeah, they cannot use this kind of method. You have to be consistent. If you use FIFO, then you have to use FIFO for all your reporting. But if you use LIFO, then you have to use LIFO for all of your reporting.
Reporting.
But there is again, all right, we say that gross profit. Where's your gross profit? Inventory comments. Specific is okay because it's parallel, because you take the specific item that you sell, then you know how much is the specific item that you have in balance. All right. Average cost, okay, average cost is always average lah, yeah. But it says that you may overstate, because FIFO overstate income during periods of rising prices may increase income tax due, right? But here most conservative method lah. So but for principle of consistency, right, you must accounting that the principle, you must be consistent all the time. So if you use FIFO, you must continue using FIFO, right? But and then it says that mana periodic. Okay, hold on, before I go into that. All right, here mana sebenarnya kita nampak tadi International Financial Reporting Standard, all right, prohibit the use of LIFO. You see that? So, but you must know how LIFO works, because you must understand why is it prohibited. All right, because it may under reporting, right? So that's why we always be consistent. All right, you have to use FIFO, average cost, or specific. And again, consistent means that if you keep or use FIFO, you have to use FIFO. And if you have to change, then you have to justify. Okay. So if you talk about perpetual, you will always have this method lah. You must show me the movement of the inventory, and you show me the cost of goods sold and your closing stock. Whether you're using FIFO, LIFO, or average method. You get that? Okay. Tapi kalau you pakai periodic, alright, periodic, you have to take physical count. Remember? Periodic, it means that you do not actually monitor the inventory. You only have, whenever you purchases, you just record that as purchases. Okay, so at the end of the year, you must do your physical stock, all right, stock take. Then you have to identify how much is your actual inventory. From there, all right, that closing stock, and then you will compute your COGS. All right, without physical stock, you cannot determine your closing stock for your periodic system. Okay, so and then you also have the LCM, lower of cost method, LCM, right? Lower of cost or lower of cost or market. So give if all right, you have this LCM, lower of cost or market, you have to look at which one is lower. So it means that you have to compare the cost and the market value. You have to report, because accounting is always about being prudent. You are very conventional, all right? So when you record the lower of, which one lower, whether cost or market, which one is lower, you're going to report that, yeah? So that's why we see that here, for example, here we have ski equipment. Using FIFO, the downhill skills, this is the list of inventory, list of inventory. So downhill skills, they have a closing stock of 16,000, but the market value is 18,000. So applying LCM, whichever is lower, we're going to take 16,000 as the closing stock for your downhill skis. But for cross-country skis, all right, you have FIFO cost, report as 4,000, market value is 3,000, then you're going to take the lower. So you take 3,000. Right? In total, all right, if you see that totality, 20 and 21, you're going to report 20,000 inventory category. Because why? The 20,000 FIFO is lower as compared to the market value. Similarly, it goes for your ski accessories, ski boots, all right, whichever is lower will be taken as your closing stock, right? Okay. Oh, tak nak. Janganlah. Last time pun my class pun my son buat Maggi. Hari ni my daughter nak buat Maggi. Okay, translate.
Maggi.
See, my husband pun suka Maggi.
Hantar sini sikit tu.
Ha?
Hantar ke sini sikit kat Selayang.
Nanti kita pergi makan tudung lah. Okay. Purchase, note that an entry is not made to inventory. Okay, ni periodic kan? There's, you open up purchases account. Okay, I have all this. Okay, bila you buat pasal inventory system, alright, you remember bila pakai periodic, you have to identify your COGS. Right, so first in, first out, katalah macam ni kan. Right, you have 5 units from December 1st. So this one is periodic. How you decide on the ending inventory? 5 units, you ada purchase, and then 5 units, 120, 2 units, 100. So total that you have is 1450. Okay. So ending inventory is 1450. So what do you call this? 650, 600 and 200. Alright, so all this is your closing stock. How do you know this amount? Because you under periodic, you have to stock take. Right, you do stock take and you find out, okay, this is my inventories. So this is your closing balance, 1450. You have your closing balance, then you must know what is your opening balance. Right? Okay. Mana datang COGS ni? This is your closing stock. So dia ada information. Oh. Okay, periodic you buat macam ni, nampak tak? Alright, so are you looking at this page? It's very important, yeah, this one. You have to understand, yeah. Okay, you have beginning inventory 10 units. Each one costs you 80, so total cost is 800. And then this is your, how you compute this? This one is your opening balance plus your purchases. Then you have goods available for sale, 3,000. Okay, you have 30 units, 3,000. Is that clear?
Yes, ma'am.
Okay, yeah. So you have opening balance. We have 10 units, total 800, and then you have purchases. From total purchases plus your opening stock, you have 30 units, and total cost is 3,000. So that is what we call available for sale. But when you do your stock take, you find out, at the end of the day, I only have 12 units left. How do you know 12 units? Because you do stock take lah. Because you count how many units you have from the 30 units beginning. All right, 30 units that you have, you purchase. All right, now we only have left with 12. So it means that the balance 18 is your goods sold or your unit sold. Right? So you know that unit sold is 18 units. But what is the cost of the goods sold? Given this information, all right, then you have to decide lah, whether are you going to use average method, are you going to use FIFO, or are you going to use LIFO, right? So I think that maybe I should share here. Dapat tak? Do you get the idea now for periodic? I think that periodic is more interesting. Okay. Let's look at here. I Aina, how am I supposed to go to the next page, Aina? Please. Here. I don't know how to go to next page.
Right page.
Oh, okay, like that ah. Okay. Aina, yang tadi hilang Nana. Oh, okay. Oh, dia pergi kat bawah. Mama nak ke bawah? Kat bawah. Okay lah, tak apalah. Nanti I betulkan. Hilang pula. Wait. Okay, let's see again. Here, alright, the information provided to you is that goods available for sale is 30 units.
It's 10 o'clock.
Isn't it? And how much is the cost? Is 3,000 ringgit.
3,000.
And then you have closing stock is 12. And then your units available, this closing stock means that this is cost a good sold. Right? Do you get that?
Yes.
Where am I? Hey, do you see Aina the working? Okay. So katalah kalau I kata number one is that I'm using average method. What is per unit cost? Right, you're going to have per unit cost would be 3,000 divided by 30.
30.
Kan?
100.
So per unit is 100
100.
average cost. Silap. 100. So kata, then how you decide on the cost of goods sold? So your COGS would be 18 berarti kan goods sold kan?
Yes.
COGS is 18 times by 100 or your closing stock equals to 18 how much is your closing stock? 12
1,000.
times
12.
by 100. So here is ada 1,800, here is 1,200. So kalau you pakai average, nampak? What if you use FIFO? Cover page of block. Cancel. Insert blank page. Okay. Kalau you pakai FIFO, you nak decide apa?
We took 5 for
Okay.
first purchase.
You nak decide what?
second purchase.
Number one, you nak decide cost of goods sold. Betul? So kalau
Yes.
cost of goods sold, then you have to look back you punya movement of your what? Inventory lah. Okay, kalau cost of goods sold makna barang yang jual. So how many that you sell? Cost of goods sold, COGS. Right, you sold 18 units. So how to
18
get these 18 units under FIFO? You tengok balik you punya slide, this slide yang information for the foreign inventory. Slide number 20, are you there? I sebab nak move from here to there tu, I tak boleh. Yang bunyi crack tu Okay? Are you dah tak dekat slide ni? Macam mana nak buat ni? I tak boleh. Beginning inventory ada 10 unit kan? So kalau you nak kira COGS, how many is your COGS? How many goods sold?
Closing. We 18
units. Alright, so you must use 18 units. You must use FIFO. First in, first out to decide how much your COGS. So kalau 18 units means that you must start from first in, first out kan? So you must start from the top lah. So you must get 10 units at 80. And then you have 5 units at 90. Are you following me?
Yes.
Yeah. You have to see from the top. 10, 5. So how many units more left?
3
3 units. So 3 units at
100.
100. So then you kira lah berapa COGS? Ni 80. This one is 450. This one is 300. So total how much? 80 plus 450 plus 300. How much is it? 830. 830. What is this 830? COGS ah. Under LIFO. Under FIFO. First in, first out. But what if I want to say how much is my closing stock under the same? Alright, what is my closing stock under FIFO? How much is my closing stock? Units in ending inventory?
Yeah.
12 units. Isn't it?
Yeah.
Right.
Okay, how you get closing stock 12 units? So closing stock means that stock which is still in the company.
Yes.
So you have to, if you're talking about first in, first out, means that the most recent stock must still be in the company. So how you decide on that? What's your closing stock? 12 units. You must take 5 from
From the 12. Yeah. From
5 units from
sorry,
130 at 130.
130.
130.
Okay. And then another 5 units from 120.
120.
And another 2 units at
100.
100. So how much is that? 130 times 5 equals to
650,
50.
600, and 200.
And then how much is this?
100,
I don't know.
600,
600
and 200.
200.
Yes.
And how much is the total is
14,
1214, is it? 1450.
50, yes.
Yeah. So what is this? This is your closing stock under periodic. All right. The top one that we compute is the COGS. So it means that if you want to know under periodic, FIFO, your cost of goods sold is the earliest stock that you have. All right. That's how you decide 10, 5, and 3 because that is the first purchases. 10 units, and then you buy another 5 units, and then you take another balance 3 units.
Yeah.
And if you look into the closing stock, it will be from the bottom, right?
Yeah.
The more recent purchase. 5 units, 5 units, and 2 units. So if you do compute your closing stock and cost of goods sold, total must be 30 units. Right? COGS is 18, closing stock is 12. So these are total stock available for sale. Right? But out of the 30, you have sold 18 units and the balance is 12 units.
Yes.
Sama tak? So if I were to use LIFO, then it will be the other way around.
Yes.
Right? LIFO means that COGS, cost of goods sold, is the most recent.
Yeah.
You sold the most recent purchases. So you have to start from the bottom, go up. But talking about closing stock, it must be the old inventory. So the closing stock is from the top. Yeah, beginning inventory plus first purchases, all that. Right? So does that make sense?
Yes, ma'am.
Okay, so you have to decide how to decide on the COGS and your closing stock. Using perpetual, you use the table form. But for periodic, you have to use this formula. Can you
Ma'am,
see that? Yes.
the table with the 3 columns, we'll have to make it?
Yes.
Okay.
And the perpetual.
Okay.
Yeah. So perpetual is FIFO. It could be FIFO. It could be LIFO. It could be average.
Yes.
All right. For periodic also, it could be average. So the one that I showed you here, your average. All right. You must compute how much is the average cost. Then your closing stock and your COGS based on the number of units times by average cost. But for FIFO, LIFO, then you have to look at the movement of the stock. Nah.
Yes.
Yeah. So normally this is one question. All right. I will normally ask for the perpetual. And all right, another question may be on the periodic. So you must know both on how to compute your COGS and your closing stock.
Okay.
Okay.
Yes, ma'am.
So I can have, for example, I want you to use perpetual, FIFO, And then I can ask you to compute periodic LIFO using the same information. But the answer will be different. Because why? The method is different. Right? Method of recording and method of determining the COGS and your closing stock.
Yes.
All right. Gross profit method. What is this? Never mind. Okay, so these are later, for example, when you do your financial statement analysis, you will come to this ratio, right? Where you talk about inventory turnover. The formula used is for beginning inventory plus ending inventory divided by 2. So inventory turnover actually looking at how many times that you actually looking at cost of goods and average inventory lah. Alright, bila cakap average tu you opening plus closing divided by 2. So you get the average, right? So inventory turnover tells you how quickly a company sells its inventory, right? Of course, for a company, they want to sell as soon as possible, right? If you have an inventory, you want the number of days inventory in the company shorter, right? But if you take longer period to sell your inventory, that is not a good indicator. So that's what we talk about inventory turnover. Right. So you have, for example, if you want to go detail, then you have to look at okay, which inventory that has been, because this one is the average. Then you might want to identify of all your inventory, for example, your closing stock, which one has been the longest in the business, right? Which one you have purchased for so long but yet to be sold. So you have to check. Maybe you have to give discounts, all right? You may have to do something in order to get rid of those long inventory. Yeah. And then you also want to say the average days to sell an inventory is also important. Right? How many days on average it takes to sell the inventory lah, right? Okay, inventory turnover, let's look again. I may have said it wrongly. Inventory turnover measures how quickly a company sells its inventory, a ratio that is compared to competitors such as inefficient use of asset. To calculate, take cost of goods. So, how sales is. So, because you normally compare your performance with your competitor, all right? And the average number of days to sell, how many days it takes to sell inventory. Calculate the number of days in the year divided by inventory turnover. So it's actually related because you need to compute your, in order to compute average days to sell inventory, you need to have your inventory turnover from the beginning. All right, so it's two related, yeah. So in this case, for example, your inventory turnover is 6.31. So throughout the year, all right, in general, on average, you take 6 times for you to roll your inventory. It means that you buy and sell, buy and sell, buy and sell. So it takes you 6 times, all right, for you to buy and sell your inventory. But the number of days that you take in order for one inventory, you take 57 days. Average days to sell inventory. So you take a very long day, all right? So that's why if you take 47, that, yeah, it's very long. All right, it says that okay, so it doesn't say more. All right, and then you have receivable turnover. This one also related to your inventory because receivable is your customer. All right, you sell your inventory to your customer, and it tells you that how many days actually for you, how many days that that you sell. All right, how many times you sell your inventory to your customer. And average days to collect receivable means that for every customer, on average, how many days you sell and how many days is that from the day of sales to the day of collection. All right. And of course, we want a very shorter period, a short period as compared to a longer period. All right. Means that you want to sell and collect as soon as possible. Right. Because if you don't collect from your receivable, then that amount may become your bad debts. Right, means that you are not able to collect from your account receivable, then it becomes an expense. So you do not want to have that in your business. Yeah, you don't want to have bad debts. All right, end of chapter 8. So today we finish at 10:13. I take it as 10:10 lah. Okay, hari ni. So we covered 2 chapters, chapter 6 and chapter 8 today. I will make a recording on chapter 7. All right, but then next class we'll discuss on the financial on the asset, All right, purchase of asset. All right, that one is very important. And then when talking about asset, when you purchase asset, and then you have to provide depreciation, and then whenever there's a disposal, how you going to do it? Yeah. Okay, that's it for today. We have
Okay,
one Simon.
I wanted to ask
Yeah.
regarding do we have a midterm?
We are going to have test 2 later.
Okay. And
Yeah,
also,
so means that for your final exam, there will not be any financial accounting portion. Your
yeah,
final exam will only based on management accounting.
okay. So that
Oh,
will be the last thing for this subject, right? Financial accounting.
Sorry.
Test 2 will be the last test for financial accounting, right?
Yes. And in between, I'm going to give you quizzes based on chapter.
Okay.
Right?
okay.
Because we give you a better option lah. I hope that your understanding for each chapter will help you, all right, for your every test that we have. Yeah, test 1 and test 2. Is that okay?
Yes.
Yeah.
Okay.
Yeah. So please, all right, make sure that you go back and review again your chapter 6 and chapter 8 because, all right, this will be tested definitely. Right, I can give you just now. Remember just now tutorial 2, I will mark that paper, the tutorial question 2. All right, and then chapter 8, I will give you another question lah, all right, for you to do. Is that okay?
Okay, ma'am.
Okay.
All right. So with that, I think that's all for tonight lah.
Okay.
Okay, so I thank you for your participation. All right, it smells so good now. The Maggie is ready. Where am I? Stop sharing here. I can share with you the notes just now. All right, later. What else do you need?
The Word file.
The Word file for?
The initial one that we did for perpetual versus periodic statement.
Sorry.
Yang word tadi tu.
Yang ni ke yang
Word
chapter?
tadi, file word tadi tu. Yang Dr. type tadi.
Was it the table?
Yeah,
Yes.
table.
I have already shared in the classwork.
Oh, okay.
And
Oh.
I'm very efficient.
Yeah.
So now I will just include this write-up, right, in the chapter 8. Okay?
Okay.
With that, please put in, don't forget your attendance. Where your attendance? You give me attendance last class?
I think so.
I do remember that.
Yes.
All right, and then for attendance for today also. So with that, thank you and Assalamualaikum warahmatullahi wabarakatuh.
Okay, thank you, Doctor. Waalaikumsalam warahmatullahi wabarakatuh.
Please review
Selamat makan Maggi, Doctor.
Huh?
Selamat makan Maggi.
Okay, bye.
Okay, bye.